Last week, mortgage rates surged past their previous yearly peak and printed their highest daily rate this year of 7.22%. Then they spent all of last week firmly above 7%. This puts mortgage rates around 7% for nearly 9 weeks now. How are these high rates impacting buyers? Will home prices ever come down? And what does all this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area. And every Monday, I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar, as well as which cities and zip codes are the coolest if you're a buyer looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, is my favorite part of the video. It's a top 10 ranked list of the top 10 hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to move to the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is July 10th. Let's see what the data is telling us this week. And if this is an old video, you can click the playlist here. It'll take you to the newest weekly market update. First up is market news. So last Friday, we had the BLS jobs report, and it was not helpful to mortgage rates. The economy is still too hot, and that's why rates went up. Remember, if the economy remains too strong and there are too many jobs for people making too much money, then the Fed has no reason to lower interest rates. In fact, it might actually lead them to continue raising interest rates. According to the lead analyst at Housing Wire this week, who's much smarter than I am, we need the 4-week moving average of jobless claims to get above 323,000. In this report, the 4-week average actually fell and is currently only around 253,000. Another problem is that wage growth still remains too hot. Average hourly earnings are up by 4.4%. So this is all great for you as a consumer, but bad for mortgage rates because the Fed needs you to have less money to spend to bring down inflation. So total non-farm employment actually increased by 209,000 in June, and unemployment just remained around 3.6%. No big change there. So basically, in the eyes of the Fed, there are still too many people making money by having jobs, and those people who have jobs are making too much money by wages continuing to increase. The Fed needs less money out there being spent in order to bring down inflation. And if you happen to love analyzing data and want to know a lot more about this in depth, I'll link the Housing Wire article below. It has a lot more information than what I covered here. Okay, moving on, let's look at interest rates. Okay, we started last week at a 7.04. We shot all the way up to a 7.22 and ended the week at 7.14, which is where we'll start this week. This makes 9 consecutive weeks with rates around or above 7%. Is this going to be the new normal? I usually only talk about local data, but I wanted to talk a little bit about national data because it's pretty significant. In the last week, in the entire country, active listings were negative week to week, new listings were negative week to week, and total active plus new listings were negative year over year. So this shows you that even with rates near or above 7%, there are still too many buyers hunting for too few houses. And I very quickly wanted to show you this graphic. So if you'll see this black line, that's our current inventory, what it's looking like this year in 2023. So if you look at the point of the year that we're in, we're pretty much flattened out and actually, as mentioned this week, declining. Whereas if you look at last year, if you'll remember what the market was like last year, from March on, inventory was going straight up. So we're much more closely following what inventory looked like in 2021. Even though we started at a higher number, it definitely looks like we're going to be ending the year with less inventory in 2023 than we ended up with in 2022. So just looking at this, there is no reason to believe that inventory is going to increase. Now, moving on to mortgage purchase applications, I have to correct something that I said last week. I misunderstood. I thought it was going to be a positive print, though I didn't have the number yet, but there actually was a 4.4% decline 2 weeks ago. So I should have said in last week's video, 4.4% decline in people applying for mortgages. So that was the first decline in a month. Then this week, we saw another decline of 5%. So we could say future demand has declined about 9% over the last 2 weeks. And yet, in the same time period, inventory is also declining, which means yes, there are less buyers, but there are even less sellers. So with regards to supply and demand, the supply is dropping faster than the demand, which means prices will probably remain where they are, if not start to increase. And all that this data is telling you is that there is no evidence that housing buying is going to get any easier from here until the end of the year. As I say every week, if you can buy a house, then buy a house. Do not try to time the market. It doesn't work for anyone. And if you're still on the fence about whether or not now is a good time to buy, please watch this video. And starting this week, I'm going to be going over the MLS data as well. In Dallas County, we had 241 closed sales in the last 7 days. We had 396 new listings in the last 7 days, and 86 of the homes closed were immediate sales, meaning they sold within a week. In Collin County, we had 200 closed sales in the last 7 days. We had 310 new listings, and 58 of the closed sales were immediate sales, meaning 0 to 7 days. Okay, let's move on to the housing data. If you've seen any of my videos, you know that what I use here is called the Market Action Index. It's this easy graphic that just takes all of this data and puts it into an easy number here to read. Nothing really new this week. The market is basically still frozen with rates where they're at. It's kind of a race to the bottom of the amount of buyers there are versus the amount of inventory there is. As you can see, it's still a strong seller's market from last month to today. Almost no change, a very tiny decline, which of course is to be expected with rates shooting up through the roof. Median list price has not moved one bit though. The median days on market remains at 28, though the average has been dropping for a while. I prefer to use the median though. The amount of homes having price decreases, this has changed almost none for months. It's a totally normal number for any market. Inventory continues to rise, though not a dramatic rise given where rates are at. And you can see here on the inventory when we zoom out, what we're looking at, we really want to know the 90-day average to see where things are at. And as you can see, it's still not even close to this December peak of around 2,800. And really to have a healthy market, we need to be way back up here closer to 5,000. So still quite a bit less than half of the inventory needed to be a normal market. Very quickly, we'll move on to Collin County. It's the exact same. Collin County has had a little bit more of a price drop, but it's still close to where things were in April. So not a significant drop given where rates are at. Median days on market remains low, average as well as dropping. Price decreases 35%, still totally normal. Inventory climbing, but not significantly. And the market action index is just barely below where it was last month. So still a very hot seller's market. And again, if we look at the 90-day inventory, that's the trend we want to know. It's also nowhere near its peak around here of October, November, and it would need to be way up here, over 4,000 homes to be a normal market. So still nowhere close. And as we showed with the chart earlier, inventory is just not building up anywhere near as fast as it was last year. Okay, moving on to my favorite part of the video. This is the top 10 ranked chart. This is all cities and zip codes in Dallas and Collin counties. Starting with the top 10 hottest cities. We have Grapevine, which has held the top spot since I've been doing this. Sachse heats up 2 this week for the number 2 spot. Carrollton cools off 1. Balch Springs cools off 1. Louisville remains in its spot. Coppell heats up 1. Irving heats up 3, Duncanville cools off 2, Richardson jumps back onto the list at the number 9 spot this week, and Plano cools off 2 spots to get to number 10. So, Richardson jumps back on, and Grand Prairie gets knocked entirely off the hottest cities list this week. Then we always like to zoom in even further and check specific zip codes. So this is ranking out of all 84 zip codes of Dallas County and 26 zip codes of Collin County. So to make this list is a big deal. The absolute hottest zip code is Grapevine 76051, Carrollton 75007, Plano 75023, Irving 75063, Sachse 75048, Dallas 75231, Grand Prairie 75052, Louisville 75077, Richardson 75082, and Plano 75075. So if your zip code is on that list, congratulations, you can get top dollar for your property. You're in a top 10 hottest market of all Dallas and Collin County. Now we're moving on, doing the same thing for the coolest cities and zip codes. Whitewright, which is headed straight down, cools off 2 spots to take the number 1 coolest city in all of Dallas and Collin County, followed by Leonard, which cools off 2, Blue Ridge cools off 2, Farmersville heats up 2, Ferris heats up 1, Prosper remains, Van Alstyne cools off 1, Sunnyvale comes back onto the list from nowhere to the number 8 spot, and Nevada and Royce City remain the 2 hottest spots of the top 10 coolest list. Now remember, when looking at the market action index, only a 30 and below is a buyer's market. So actually Whitewright and Leonard are dangerously close to becoming buyer's markets. But once you get up here in the 40s, those are still firmly seller's markets. Now let's move on to the coolest zip codes, starting with Dallas 75219, Whitewright 75491, Leonard 75452, Blue Ridge 75424, Dallas 75208, Farmersville 75442, Dallas 75203, Ferris 75125, Dallas 75209, and Dallas 75212. Now very briefly, let's move on to inventory. We're not going to look at the 90-day. You can see it there. Basically, the cities that are curving up, most of them continue to do so on the weekly. You can see Allen is definitely continuing its climb. Mesquite had a little tick up. Garland looks like a pretty significant jump up. No real change in Rockwall. Royce City, a significant jump up. Prosper definitely looks like a significant jump. Plano actually came down a little bit this week. Frisco flattening out, McKinney shooting straight up on inventory, and Dallas a small uptick. So what do you guys think? Is 7% the new normal for interest rates? I'd love to hear your thoughts on any of this info below. And again, if you're looking to make a move anywhere in the Dallas market, just call, text, or shoot me an email. I'd love to connect. Thanks for watching. I'll see you in the next video.